Hello, everybody. Welcome to the For Investors podcast, where Wall Street meets Main Street. I'm Andrew Gay, along with Gilbert Pies and Zachary Green, and we are the Texas Hill Country Advisors, based here in the beautiful Texas Hill Country in Kerrville, Texas. And we're here today to talk to you about our latest perspective on financial markets.
I'll tell you, this week has been something crazy, and I think, as we've talked about many times on the show before, volatility. Volatility is back.
That is becoming our favorite word.
Yes, it is back in a big way. And I think if you, in the most recent few days, if you go back to last Friday, where we were having a wonderful day in the market, and then something happened. Lots of things happened, actually, and the market ended up losing all its gains and then some. And then, of course, we had yesterday also, which was Thursday. NVIDIA came out with fantastic earnings after the market closed on Wednesday afternoon. Pre-market looked great. The opening of the market on Thursday looked fantastic. And then, boom, there was some news early in the afternoon about the jobs numbers that came out for September.
That were long delayed.
Yes, because of the shutdown.
Yeah.
And because the numbers were so strong, the market interpreted that as a signal that the Feds would not be cutting interest rates in December. And I think that's probably what caused the downturn yesterday afternoon. And then we moved to today.
But wait, there's more.
Yes, there's more. Today, it's like the market has totally dismissed the strong jobs numbers for September.
Yeah.
And honestly, I think the jobs numbers for September really are not a huge factor, but because the market does respond to short-term news events, it caused a huge downward spike yesterday. But I think the market has finally pulled its head out of its rear end and said, oh, okay, well, maybe it's not that big a deal. And we're having a nice big recovery today.
Other than volatility, what else has got your attention the last week or two, Zach?
Volatility, I'd say maybe the bond market, something to look at. We expected rates to maybe hover below 4 whenever it broke that floor finally.
Or the 10-year?
Yeah, the 10-year broke below 4. Now it's been sitting back above 4 for a while. Wondering if that's a reflection of long-term interest rate expectations.
Sure.
That's what I'm thinking. People see the interest rates maybe coming down this year, a little bit in the next year, but going back up in the midterm to long term. So I think that's something interesting, just looking forward.
I think that is interesting because we've talked a lot about that. And of course, we have a lot of people don't know that there's not just the stock market that you can invest in. There's other markets, namely the bond market, which is actually a lot bigger than the stock market, but it's not as flashy and sexy. So it doesn't get near the media attention. And it doesn't trade on centralized exchanges either. So you have these big institutions that have stood up trading desks, and that's really how that market is made and facilitated. And that's across the globe. And so and that's one of the reasons we keep up with that market so much and talk about it on here, because the 10-year US Treasury yield is kind of a benchmark yield that things like mortgage rates kind of move most of the time in tandem with, not one for one, but that's why we look at that stuff. And those seemingly small little moves in the bond market, we're talking about 4% to 4.1%, right? Doesn't seem like it's a big number, but we're talking about massive amounts of money that it takes to move the needle when we see those things move, right? To us, it's just a flashing number on the screen, red or green, but there's actual moves behind that. And that's kind of why we're breaking this down and talking to it. So that's tied to interest rates. That's the other piece of the equation, I guess, that's really kind of been in the mix and been up in the air. It's like, what's going to happen with interest rates? It's not the exact one-for-one exchange. Like if the Fed cuts 25 basis point on a rate on the Fed funds rate, it doesn't mean that you're going to see this 0.25% decrease across the board for all interest rates, right? And I think that's a good example of why we're here talking about this kind of stuff, because this is stuff that we don't learn in school. We don't get educated about these types of things unless we're actually working with some kind of advisor or have worked on Wall Street or have a family member that knows this kind of stuff. So that's one of the reasons that we're here, to provide you that kind of education.
I think the other thing we have to look at is geopolitical events. There are still a lot of things out there, geopolitically speaking, that can affect and influence what happens in the market. Now we've had, wars and trade tariff concerns, and we've had, political situation here in our own country being an issue. There's a lot of things outside of the market that can influence, at least in the short term, what happens in both the stock and bond market. And I would submit to you that that's probably something that we really don't pay enough attention to, because we really don't know what could happen there. It's the stuff that can come out of left field that nobody's even thinking about that could be a real big problem.
Yeah.
Yeah.
Here's the other thing I would say too, guys. I'd like to ask a question. If you were a client and you were thinking about investing, what is the customer supposed to do, or a potential customer supposed to do, when you've got the crazy stuff like this going on in the market?
Well, the first thing I do is, the right answer is, I go to my financial advisor and say, hey, financial advisor, this stuff is freaking me out. What should I do?
Yes.
And they'll take it from there. That's the number one thing. But I would say, just to, I'm not trying to make a blanket statement here, but generally speaking, depending on what they have going on, unless they have an extenuating circumstance or a life event that changes their projected future dramatically, or a reason to change their long-term plan, more than likely the short-term noise that happens in the media, politics, whatever it is, isn't usually a reason to change anything that they have instituted in their long-term plan. So in other words, one of the most important rules of investing is try to not freak out.
Mm-hmm. Good point.
Yeah.
So what are some of those life events that would cause you to reevaluate maybe completely your whole entire investment portfolio?
Well, let's do the D's. The D's.
Yes.
Okay.
What are the D's?
Okay.
This is a teaching moment.
On air.
I like
On
this.
air.
I like-
And I don't even remember if
I think I got one.
I was going to say, I don't know if I'm going to remember all of them. And I don't even remember if there's 3 or 4 or 5, but
There's a bunch of
it's
them.
death, disability, divorce. Those are the biggies.
Okay.
Death, disability, divorce.
And lately we've added dementia, or
Sure.
something along those lines.
Diagnosis. There you go.
Yeah, diagnosis is a good one, but also, the birth. If we're going to talk about death, birth. If you have a newborn, perhaps, or you're a grandparent and all of a sudden you're having to take responsibility for your grandkids. Another good one that I think is something that doesn't happen very often, but does happen. Winning something. So a lottery, a huge windfall, or some kind of inheritance.
Yeah, I was about to say a windfall type of event.
Yeah, absolutely. Those things are important too. I think people don't pay enough attention to those factors that happen in their own lives that would really necessitate a visit with their financial advisor to reevaluate some of the stuff they're doing.
Because, I tell people a lot of times, like, if you lose a loved one, that's not, and you're grieving, like that's not necessarily the best time to sit down and do all this. It's a lot better to try to take the proactive approach and do it when you're in a different state of mind than it hasn't happened yet. So.
Yeah.
And the crazy thing is that I've been doing this long enough that I've experienced all of those things on some level with all of my customers. I've been through the people that have passed away, that have gotten divorced, that have gotten dementia, that have gotten a diagnosis, retirement, marriages, second marriages, third marriages, windfalls that they weren't expecting. Been through all of that.
Lottery winners.
A couple of those, things happen. And the best thing you can do is have somebody in your life, like a trusted financial advisor, that you can come to ask these questions of. Because most of the time, we may not have all the answers for you, but at least we can point you in the right direction. Just this year, we've had people that have moved here that don't have a local advisor and they're looking for one. We've had people that have retired. We've had several clients pass away.
Had inheritances.
We've had inheritances for sure.
Had a couple of people just recently that were not on the cusp of retiring, but they're 5 to 8 years away, and they're trying to do the right thing and start to plan right now.
We've had layoffs. We've had people that were furloughed from the federal government. We've had all kinds of different issues. And for every single one of those people that we've talked to, it doesn't alleviate the stress involved in the situation. But when you can talk to a financial advisor and have a plan, it can at least minimize the stress that you're having to go through in the moment. And I think that's the key. What we're trying to do, even though we talk about a lot of short-term events, even though we focus on, oh, what happened to the market this week or what's going on in interest rates this week, we're really talking about a long-term plan for our clients. And so if you find yourself in a situation where you have some of these questions come up, or you're thinking about what if those things happen to you, talk to us. We can help you. We can walk you through, at least give you some ideas, point you in the right direction. Heck, we've even helped people sign up for Social Security. That was a new one for me this week. So I would strongly encourage anybody out there that's listening to us that has questions about finances. Well, heck, Andrew, just this week, you visited with somebody over the lunch hour.
Yeah.
You brought lunch in and you sat down with a young lady and visited about the basics of investing.
Yes. So even if you don't have to have like some sophisticated portfolio or be an
Right.
existing investor to come talk to us. One of our main jobs is education, and it's okay if you don't know the right questions to ask. That's one of the reasons we're here, is to help you and say, listen, here are the questions you should be asking and why you should be asking them, and take you through that and help you navigate those decisions and how to make those decisions. So I hope you guys have a blessed, wonderful, and warm Thanksgiving. And this is the perfect time of the year while we're talking about gratitude and giving thanks, that if you want to be proactive about taking care of your financial future, whatever that means for you, come talk to us. Even you or your family, we'd be happy to just have a conversation. And with that is it for today. Thank you guys for tuning in. Don't forget, interact with us, share our content. We're on Facebook, LinkedIn, and YouTube. We will catch you back here next time. Happy Thanksgiving. Securities and investment advisory services offered through LPL, a registered investment advisor, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.